$80 oil prices, is that going to be a break for the markets? Well, inflation's certainly coming up here, as well as those higher energy prices are going to get passed on to consumers. That's going to potentially start to weigh on corporate earnings. And as we go into really Q3 earnings right now, this is starting this week, we're going to be listening to a lot of corporate announcements talking about their outlook, supply chain disruptions, the inflationary costs, all of the costs that are being brought in by companies and their ability or inability to pass that on to consumers. That's going to be impacting earnings. But again, this morning, markets are trading above support here at this point. They are going to open a bit weaker here. This is something we're watching very closely here. Right now, markets are on a money flow buy signal as well as a MACD buy signal. We did confirm that on Friday. Now, the good news here is that the markets did break above their 100-day moving average, so we're now back above that kind of critical level of support. Holding that here, and again, trying to rally back above the 50-day moving average is going to be key here over the course of the next couple of weeks. Markets are going to open up a little weaker today, but we do need to see markets hold above this 100-day moving average. If we don't, this previous level of support becomes key, and the more times that we retest this support, the likelihood becomes greater we're eventually going to break that level of support and test lower levels. Importantly, though, on a longer-term basis, we have some bigger concerns. On a weekly basis, the market has triggered a weekly money flow sell signal, and we do have that sell signal in place with declining money flows. Now, the important thing to note here is that when you have a sell signal, it doesn't necessarily mean you get a big correction. You get a correction kind of like we've had here recently, as long as money flows are positive. The problem becomes when you have a sell signal, as we did back in February of 2020, with money flows declining sharply. That's where you get much bigger drawdowns and corrections, even as we saw in October and November of last year as well. So again, watching these weekly money flow signals are important because it tells you about the strength of the underlying market. A bigger concern, though, is the monthly. On a monthly basis, the money flow sell signal has also triggered, which corresponds with the weekly sell-off in the markets. Of course, the last time we saw this money flow sell signal was back in February of 2020, corresponding with that decline. Monthly signals do not occur very often. When they do, they are much more important to pay attention to. The previous money flow sell signal was back in the 2015-2016 kind of debacle as well. So again, paying attention to these bigger long-term indicators are important because they tell you about the underlying strength of the markets. Again, nothing to panic here in the short term, but something worth paying attention to until these signals reverse. And since these are monthly signals, they tend to take a while to do that. So again, weakness could be coming, but again, we've got to be watching the headlines, earnings, and economics very closely here, but pay attention to your money. I'm your host, Lance Roberts, 3 minutes on markets and money. Be back tomorrow.